Today is Tuesday, July 18th, 2023, and this is your market update for today. We're at teamprice.com, Insight and Statistics. A lot of the information here is updated on a daily basis, most of it updated on Thursdays. Let's go ahead and take a look at it. Active residential inventory. This information was pulled this morning in 11,742 active residential listings across the entire Austin area MLS. That's going to be a 2% month over month increase. So compared to exactly 1 month ago, we've got 230 additional listings on the market. Yearly change 25%. We have 25% more listings today than we had exactly 1 year ago. There are currently 5,007 properties under contract. 5,007 properties under contract. To put in perspective, 3 weeks ago, there were 5,337 properties under contract. One of the single best leading indicators that we currently track is called the activity index, also known as the absorption ratio, or also known as the hotness ratio. What we do is we take everything that's under contract, both active under contract and pending. The Austin area MLS has those two classifications, active under contract and pending. We take all of that number, in this case, the 5,007, and we divide that by the active plus everything that is pending. So we take the 5,007, we divide that by the 11,742 plus the 5,007. That gives us the rate of absorption in the market. So we're currently at 29.89. A 100% absorption would mean that everything is under contract. There are no active homes. A 0% activity index would mean that everything is active and there's nothing under contract. The middle of the market is going to be 50%. That would actually be a very healthy market, really a hot market. 29% is considered very good. That gives us about 4 months of inventory, and you can see that that's confirmed by the months of inventory. What we do is we take everything that's sold over the past 12 months, in this case 34,792 properties have sold over the past 12 months, and we see how many properties are selling on a monthly basis. So based on the number of properties selling on a monthly basis, we take the number of active homes, and we can see that there's roughly 4.05 months of inventory. Months of inventory is going to be a lagging indicator. The activity index is going to be a leading indicator. And as you can see, the activity index has slowed down since it peaked towards the beginning of May. Towards the beginning of May, we were approaching 37% activity index. Now we're closer to 30% activity index. Because the activity index is dropping, demand is slowing down. Look what's happening with months of inventory. That's going to be the orange line. Months of inventory is increasing. Back in March, not too long ago, we were looking at about 3 months of inventory. Right now, we're a little bit north of 4 months of inventory. Let's keep on going. There are 11,742 active properties currently in the market. 52.4% of those active properties have had a price drop. That's what this means right here, a little arrow going down. 42.9% of all the active homes currently on the market in the entire MLS have remained the same. 4.7% have actually had a price increase. And you can see the breakdown for all of the cities in Central Texas. We track 30 cities in the Central Texas area. Occupancy, out of the 11,742 active homes on the market, 57.3% are vacant, 37.6% are owner occupied, and 5% are tenant occupied. Days on the market, 47.5% of all the active homes on the market have been in the market for less than or equal than 50 days. That's going to be the active days on the market. 25.5 between 50 and 100 days, and 27% greater than or equal to 100 days. And you can see the breakdown per city. Now, this is a really interesting thing that we track, the occupancy in new construction. As you can see, 6,733 properties are currently vacant. Out of those, 3,661 are new construction. So 54.4% of all the vacant properties currently in the market are new construction. And then here we've got the activity index in the months of inventory. You can see that we're a little bit towards the colder part. We are not warm, but we're towards the colder part of the market. And that gives us more of a neutral market. We're a little bit north of 4 months of inventory, towards 30%, still a very healthy market, still within a seller's market, but things are absolutely slowing down. Some cities are well into the buyer's market, but for the most part, most cities are still in a seller's market. We have the same information for 75 zip codes in the Central Texas area. Let's take a look at insight and statistics again, and let's take a look at market cycle really quick. So far this month, 1,994 properties have sold. So far this month, that is a 36.6% drop compared to last month and a 29.8% drop compared to last year. Now, keep in mind, this information will change because we are halfway through the month. You can expect this information to change. This is a projection, but you can expect this information to just end a little bit higher. The average sold price so far this month is a amazing $650,251, a $43,415 increase on a month-over-month basis. That is a staggering number. We have not seen a number this large really at any time going back 2 years. That's a 7.2% month-over-month increase, which is really amazing. We're currently at a 0.8% year-over-year increase. When you look at the median sold price, we're at $490,000, a $14,688 month-over-month increase. We are noticing a record demand for housing right here so far this year from January until now. July is turning out to be an excellent month when you look at the price. A 7.2% month-over-month increase is a astounding figure. As a matter of fact, let's take a look at historically what that means. Here's the 7.2%. That is the single best July on record. That beats July of 2020, where we saw a 6.2% month-over-month increase. It is July 18th. We expect this information to change, but so far for the month of July, a 7.2% is a absolutely amazingly high number. Let's look at a few more data points here. This is the average sold price and the year-over-year percentage difference. You can find this information at teamprice.com. When you go to Insight and Statistics and you click on Market Cycle, this is page number 4. The market peaked May of 2022, where the average sold price was $681,939. And so far, from May 2022 to July 2023, we have noticed a 4.65% drop, a $32,000 drop. But as you can see, not only has the slowdown decreased, but looks like, let's take a look at this. It looks like February was the bottom. That's when we bottomed out. And now we've made a really nice, good jump back into where year over year, we're actually positive 0.76%. Really amazing. When you take a look at the year over year sold price percentage change, over the past 23 years, this goes all the way back to January of 2000, we peaked at 44.3% May of 2021. We went all the way down, way past 10%, closer to 12.5% on the negative. And right now we are positive 0.8%. Let's keep on going. I want to share some other information here with you. We looked at the median, or we looked at the average. Now we're going to look at the median. The median sold price and the year-over-year percentage difference. The market peaked May 2022 at $550,000. July 2023, we're at $490,000. That is a 10.91% drop from the peak May of 2022. I want to remind you that all of this information is at teamprice.com, insight and statistics. This is your daily recap. If you have any questions, please let us know. We are here to help and to assist you.